peaked. We might have advances going forward, but can it really match what's happened over the last year and a half, 2 years?
Well, I don't think there's any doubt that the pace of recovery we've seen in the stock market is unsustainable. And that's what you would expect. Coming out of a recession, particularly the one we experienced in 2008 and 9, was so severe, stocks tend to lead the recovery, and that's what we've seen. So I don't think about it so much in the context of what the broad market's going to do, but what parts of the market are going to do better. And this gets back to the leadership change. I think there are parts of the market that can do extremely well.
What do you think companies are going to do with this cash they're holding?
You know, it's a big question. I think there's been a lot of disappointment and surprise that companies haven't reinvested, but it's not that surprising given that we're still recovering from this economic recession. There's a lot of overcapacity. I think what they're doing right now is returning capital to shareholders, and so they're being very shareholder friendly. And that's a normal part of the economic recovery. I think as the economy continues to improve, we'll see that cash go into projects, M&A, things that are shareholder friendly but maybe not as bond friendly. And that, I think we'll start to see, that should start to show up in the markets probably later part of this year, early next year.
And we should also point out, when you look at equities broadly, U.S. is not at top of the list for you. There are other parts of the world you actually like better.
That's right, and it's part and parcel with where we are in the recovery around the world. So the U.S. has led the economic recovery since 2009, no question about it, and stocks have done better here. But now we're seeing a rotation. So we're seeing policy changes in Japan and Europe in particular, which could be very positive for equities in those regions. Emerging markets are cheap, but there's really no catalyst there. Over the long term, we're still constructive on emerging markets, but right now we favor U.S. over EM in the short term.